Chapter number 2, ICAI questions. Test your understanding. Question number 1. My Decker Limited, presently engaged in manufacturing of fabrics, wants to set up a new plant for manufacturing of a special kind of fabric, providing an altogether different texture and feel. This kind of fabric has become a hit with retail customers. The company needs to set up plant for manufacturing the above kind of fabric, involving huge capital outlays to stay competitive in the market. You are the auditor of the company and find that company's revenue has increased in the financial year 22-23 to 1000 crores from 750 crores in the last year. By the time you started the audit, there was no change in the plant capacity, and information regarding need to set up new plant has become known to you during inquiry of the company's personnel. Discuss how you should proceed to deal with the above situation as auditor of the company, paying special attention to a risk of material misstatements due to fraudulent financial reporting. So here we need to discuss about risk of material misstatements due to fraudulent financial reporting. The given situation highlights need for the company to set up new plant for manufacturing of a special kind of fabric to stay competitive in the market. Setting up of such plant involves huge capital outlays, which could entail financing arrangements. Therefore, excessive pressure exists for management to be involved in fraudulent financial reporting. In such a situation, management may be tempted to inflate its revenue to show rosy picture. It is a fraud risk factor and needs to be evaluated by the auditor. The revenues of the company have jumped from 750 crores in the last year to 1000 crores in the year 22-23 without any change in plant capacity. The auditor may consider above said fraud risk factor for assessing risk of material misstatements due to fraud. In case of auditor assessing risk of material misstatements due to fraudulent financial reporting, audit procedures to address such risk like performing substantive analytical procedures relating to revenue, use of computer assisted audit techniques to identify unusual revenue transactions, and testing controls pertaining to revenue transactions need to be performed. Next question, test your understanding. Question number 2. CA Ridhima, internal auditor of Track Store Limited, has pointed out following deficiencies in internal controls of the company in her reports. Receivables are not reconciled at stipulated intervals. Customers are provided a credit limit based upon their track record. However, no review of customer credit limits is undertaken at required intervals. The statutory auditor of the company finds that no action has been taken by the company on the said deficiencies pointed out in reports of internal auditor. What does above situation allude to statutory auditor of the company? In the current situation, company has not taken any action on the deficiencies pointed out by internal auditor. Statutory auditor finds that. In such a situation, how statutory auditor of the company will deal with that is the question. The answer to the question is management failing to remedy known significant deficiencies in internal control on a timely basis is a fraud risk factor for mismanagements arising from fraudulent financial reporting. When management does not correct significant deficiencies in internal control on a timely basis, it reflects an attitude, character, or set of ethical values that allow them knowingly and intentionally to commit a dishonesty act. Failure to rectify known control deficiencies pertaining to reconciliation of receivables and review of customer credit limits has the potential to fraud. A lack of timely reconciliation of the receivables may lead to intentional misstatements. Further, non-reviewing customer limit may lead to grant of credit beyond creditworthiness of the customers. It may result in intentional tying up of the company's funds with risky customers due to collusion. The above situation is a fraud risk factor for fraudulent financial reporting. Next question, question number 3. Test your understanding. Question number 3. FAS Insurance Brokers Limited is a leading online insurance intermediary. During the year Director General of GST Intelligence (DGGI) has issued notice to the company for allegedly creating fictitious invoices for marketing and sales services amounting to 50 crores in favor of non-life insurance companies. The premise of the companies were also searched during the year by DGGI officials. The matter was also informed to IRDAI by DGGI for violation of the norms and regulations in this regard. Does above situation has any bearing on your responsibilities as statutory auditor of the company? Outline briefly in the context of the possible non-compliance with laws by the company. When the auditor becomes aware of the existence of or has information about investigations by government departments and regulatory organizations, it may be an indication of non-compliance with laws and regulations. In the instant case, notice has been served upon the company by DGGI for allegedly creating fictitious invoices in guise of providing marketing and sales services for 50 crores. Issuing an invoice without supply of service is a serious offense under GST laws, and it could involve penalties and imprisonment. Such suspected non-compliance may have a direct effect on the financial statements. The matters has also been informed to the regulator, IRDAI. Violation of IRDAI regulations may result in fines, litigation, or other consequences for the entity that may have a material effect on the financial statements. If the auditor becomes aware of the information concerning an instance of non-compliance or suspected non-compliance with laws and regulations, the auditor shall obtain an understanding of the nature of the act and the circumstances in which it has been occurred, and further information to evaluate the possible effect on the financial statements. If the auditor suspects there may be a non-compliance, the auditor shall discuss the matter with the management and where appropriate, those charged with governance. If the management are as appropriate, those charged with governance do not provide sufficient information that supports the entity is in compliance with laws and regulations, and in the auditor's judgment, the effect of the suspected non-compliance may be material to the financial statements, the auditor shall consider the need to obtain legal advice. If sufficient information about suspected non-compliance cannot be obtained, the auditor shall evaluate the effect of the lack of sufficient appropriate audit evidence on the auditor's opinion. Next, test your understanding question number 4. CAV is a auditor of a leading private sector bank. IT systems and controls is under his consideration to be reported as a key audit matter in audit report of the bank due to high level of automation and complexity of the IT architecture and its impact on the financial reporting system. At what time he should communicate such identified key audit matter? What are relevant considerations in this regard and their usefulness? SS 260 requires the auditor to communicate with those charged with governance on a timely basis. SS 701 states that the appropriate timing for communications about key audit matters will vary with the circumstance of the engagement. However, the auditor may communicate preliminary views about key audit matters when discussing the planned scope and timing of the audit, and may further discuss such matters when communicating about audit findings. Doing so may help to alleviate the practical challenges of attempting to have a robust two-way dialogue about key audit matters at the time the financial statements are being finalized for issuance. Communication with those charged with its governance enables them to be made aware of the key audit matters that the auditor intends to communicate in the auditor's report, and provides them with an opportunity to obtain further clarification where necessary. The auditor may consider it's useful to provide those charged with its governance with a draft of auditor's report to facilitate this discussion. Communication with those charged with governance recognizes their important role in overseeing the financial reporting process and provides the opportunity for those charged with governance to understand the basis for the auditor's decision in relation to key audit matters and how these matters will be described in the auditor's report. It also enables those charged with governance to consider whether new or enhanced disclosures may be useful in the light of the fact that these matters will be communicated in the auditor's report. Next question, test your understanding. Question number 5. Four audit firms, namely GPR and Co., MKS and Co., CY and Associates, and DES and Associates, have been appointed for conducting statutory audit of KNB Bank, a public sector bank, in accordance with regulatory guidelines. The professional work was divided by audit firms on the basis of the zones of bank. However, work relating to IT systems and controls was not allocated by them due to its very nature. While planning for the above work area, it was decided to test IT general controls, application controls, and IT dependent manual controls. Planned key audit procedures relating to this common area also include testing design and operating effectiveness of the controls over computer operations, including backup, batch processing, and data center security. The actual audit procedures pertaining to testing controls over batch processing were performed by team of DES and associates. In case work in relation to the above audit procedures is not performed professionally by DES and associates, discuss where responsibility for such lapses would lie in line with SA 299. In respect of common areas, joint auditors are only responsible for appropriateness of the nature, timing, and extent of planned audit procedures agreed among them. The responsibility of individual execution lies with concerned joint auditor. In the instant case, audit procedures relating to testing design and operating effectiveness of the controls over computer operations, including backup, batch processing, and data center security, have been planned jointly as it is a common area. However, audit procedures relating to testing controls over batch processing were actually performed by the team of DES and associates, although these were planned jointly. In case of any lapses in performing such procedures, DES and associates would be responsible. Next, test your knowledge. Question number 1. ABC, A, B, and C are joint auditors of a company. B is of the opinion that there are material misstatements in financial statements of a company, which, if accounted for, would turn profit reflected in financial statements of 25 crores to a loss of 5 crores. He, therefore, wants an adverse opinion to be expressed in the auditor's report. However, A and B do not concur with his views and are inclined to accept management's version. Is B required to go by majority opinion 2-1, opinion of 2-1? The answer is where the joint auditors are in disagreement with regard to the opinion or any matters to be covered by the auditor's report, they shall express their opinion in a separate audit report. A joint auditor is not bound by the views of the majority of the joint auditors regarding the opinion or matters to be covered in the audit report, and shall express opinion formed by the said joint auditors in a separate audit report in case of disagreement. Therefore, B is not required to go by majority opinion of 2 is to 1. 2-1. In such circumstances, the audit report issued by the joint auditor shall make a reference to separate audit report issued by the other joint auditor. Further, separate audit report shall also make reference to the audit report issued by other joint auditors. Such a reference shall be made under the heading Other Matter paragraphs as per SA 706. Next question, test your understanding. Question number 2. CAS is offered appointment as auditor of R Limited, a listed company. The audit committee of the company wants her to justify independence in relation to company through proper communication. Although she has ensured that there are no threats to her independence, she feels a requirement of an audit committee is beyond its purview. What is your opinion in this regard? The answer to this question is as required in SA 260, in case of listed entities, the auditor shall communicate with those charged with governance a statement that the engagement team and others in the firm are appropriate. The firm and, when applicable, network firms have complied with the relevant ethical requirements regarding independence and all relationships and other matters between the firm, network firms, and the entity that, in the auditor's professional judgment, may reasonably be thought to bear on independence. This shall include total fees charged during the period covered by the financial statements for audit and non-audit services provided by the firm and network firms to the entity and the components controlled by the entity. These fees shall be allocated to categories that are appropriate to assist those charged with governance in assessing the effect of services on the independence of the auditor and the related safeguards that have been applied to eliminate identified threats to independence or reduce them to an acceptable level. Further, as per Companies Act 2013, requires audit committee to review and monitor auditor's independence. Therefore, audit committee requiring auditor to justify her independence is well within its purview. Next, test your knowledge question number 3. You are auditor of a social media company. Of late, government has tightened nose around companies operating in this segment by bringing in a maze of regulatory legislations to protect interest of the users. How you can proceed to verify the company is compliant with new regulatory requirements. Besides, what does above situation underscore to you as an auditor? The answer to this is it needs to be verified that a company has put in place systems and procedures to meet with new regulatory requirements. The same can be verified by examining policies and procedures developed by the company in this regard, like devising appropriate system of internal control, sensitizing employees regarding new rules, engaging legal advisors, etc. Further, financial stability of the company may be threatened due to the new regulatory requirements. The management may be under pressure. It is also a fraud risk factor, and may need to be evaluated by the auditor. Next, test your knowledge question number 4. Discuss why the potential effects of inherent limitations of an auditor's ability to detect material misstatements described in Essay 200 are far greater in respect of non-compliance with laws and regulations. The answer to this question is, in the context of laws and regulations, the potential effects of inherent limitations on the auditor's ability to detect material misstatements are greater for such reasons as the following. There are many laws and regulations relating principally to the operating aspects of the entity of an entity that typically do not affect the financial statements and are not captured by the entity's information systems relevant to financial reporting. Non-compliance may involve conduct designed to conceal it, such as collusion, forgery, deliberate failure to record transactions, management override of controls, or intentional misrepresentations being made to the auditor. Whether an act constitutes non-compliance is ultimately a matter for legal determination by the court of law. Next, test your knowledge question number 5. M&N Associates are the statutory auditor of ABC Limited for the financial year 21-22. During the course of audit, the engagement partner, Mr. Manohar, notices a misstatement resulting from a suspected frauds that brings into question the audit team's ability to continue performing the audit. How should the audit team deal with the situation? During the course of audit, the engagement partner, Mr. Manohar, noticed a misstatement resulting from a suspected fraud that brings into question the audit team's ability to continue performing the audit. In such a situation, the audit team should determine the professional and legal responsibilities applicable in the circumstances, including whether there is a requirement for the auditor to report to the person or the persons who made the audit appointment, or in some cases to regulatory authorities. Consider whether it is appropriate to withdraw from the engagement, where withdrawal from the engagement is legally permitted, and if auditor withdraws, discuss with appropriate level of management and those charged with governance the auditor's withdrawal from the engagement and the reasons for the withdrawal, and determine whether there is a professional or legal requirement to report to the person or persons who made the audit appointment, or in some cases to regulatory authorities the auditor's withdrawal from the engagement and the reasons for the withdrawal. Next, test your knowledge. Question number 6. CA Anand is the engagement partner for the audit assignment of NHT Limited, engaged in manufacture of iron and steel bars. The company has its plants in the state of Sikkim. While verifying the wage records of the company, CA Anand found that maximum of the labor employed in the plants of the company was child labor. He questioned the management of the company about the same, to which the management replied that looking into the compliance of such law is outside his scope of financial audit. Give your comments with respect to such situation. The answer is, as per SA 250, conditions of laws and regulations in an audit of financial statements, the auditor is not responsible for preventing non-compliance and cannot be expected to detect non-compliance with all laws and regulations. The auditor is responsible for obtaining reasonable assurance that the financial statements taken as a whole are free from material misstatements, whether caused by fraud or error. In conducting an audit of financial statements, the auditor takes into account the applicable legal and regulatory framework for the compliance with provisions of those laws and regulations generally recognized to have a direct effect on the determination of the material amounts and disclosures in the financial statements. The auditor's responsibility is to obtain sufficient appropriate audit evidence about compliance with the provisions of those laws and regulations. For other laws and regulations that do not have a direct effect on the determination of the amounts and disclosures in the financial statements, but compliance with which may be fundamental to the operating aspects of the business, the auditor's responsibility is limited to the undertaking specified audit procedures to help identify non-compliance with those laws and regulations that may have a material effect on the financial statements. In the instant case, maximum of the labor employed in the plants of the company was child labor. When CA Anand questioned the management of the company about the same, the management replied that looking into the compliance of such law is outside his scope of financial audit. Such a reply by the management is not acceptable, as such situation may have a material effect on the financial statements. Therefore, CA Anand should ensure as to whether any penal provisions will be there for non-compliance of such law, and also whether the same has been duly disclosed by the company. If CA Anand concludes that such non-compliance has a material effect on the financial statements and the same has not been adequately reflected in the financial statements by the company, he shall express an adverse or qualified opinion on the financial statements. Next, test your knowledge. Question number 7. M Limited is a listed company engaged in the manufacturing of office furniture. The company has its activities divided into 4 geographic regions. The company has appointed 2 joint auditors, namely AB and Co and CD and Co, to conduct the joint audit of financial statements of the company for the year ending 31st March 2023. The engagement partners from both the firms, CA Amar and CA Chaitanya, along with their audit teams, had a meeting to discuss the areas of the work to be divided and their respective responsibilities. Explain the responsibilities of the joint auditors with respect to such joint audit. Responsibilities of joint auditors with respect to joint audit. As per SA 299, joint audit of financial statements in respect of the audit work divided among the joint auditors. Each joint auditor shall be responsible only for the work allocated to such joint auditor, including proper execution of the audit procedures. In cases where specific division, zones, or units are allocated to different joint auditors, it is the separate and specific responsibility of each joint auditor to obtain information and explanations from the management in respect of such divisions, zones, units, and to evaluate the information and explanation so obtained by the said joint auditor. The joint auditors shall have proper coordination and rationality wherever required. All the joint auditors shall be jointly and severally responsible for the audit work, which is not divided among the joint auditors and is carried out by all joint auditors. Decisions taken by all the joint auditors under audit planning in respect of the common audit areas concerning the nature, timing, and extent of the audit procedures to be performed by each of the joint auditors. Matters which are brought to the notice of the joint auditors by any one of them and on which there is an agreement among the joint auditors, examining that the financial statements of the entity comply with the requirements of the relevant statutes. Presentation and disclosure of the financial statements are required by the applicable financial reporting framework, ensuring that audit report complies with the requirements of the relevant statutes, the applicable standards on auditing, and other relevant pronouncements issued by ICAI, where in the course of audit, a joint auditor comes across matters which are relevant to the areas of responsibility of other joint auditors and which deserve their attention or which require disclosure or require discussion with or application of judgment by other joint auditors. The said joint auditor shall communicate the same to all the other joint auditors in writing prior to the completion of the audit. It shall be the responsibility of each joint auditor to determine the nature, timing, and extent of audit procedures to be applied in relation to the areas of work allocated to said joint auditor. It is the individual responsibility of each joint auditor to study and evaluate the prevailing system of internal control and assessment of risk relating to the areas of work allocated to the said joint auditor. As regards decisions taken by all the joint auditors under audit planning in respect of the common audit areas concerning the nature, timing, and extent of audit procedures to be performed by each of the joint auditors, all the joint auditors are responsible only in respect of the appropriateness of the decisions concerning the nature, timing, and extent of the audit procedures agreed among them. Proper execution of these audit procedures is the individual responsibility of the joint auditor concerned. Test your understanding. Test your knowledge. Question number 8. Test your knowledge. Question number 8. MNO Limited gets its accounting data processed by a service organization. CAR is the statutory auditor of MNO Limited. CAR wants to obtain a understanding as to how MNO Limited is using the service of a service organization. What all understanding should she obtain? The answer to the question is, when obtaining an understanding of MNO Limited user entity in accordance with SA 315, CAR shall obtain an understanding of how MNO Limited uses the service of a service organization in its operations, including the nature of the services provided by the service organization and the significance of those services to the user entity, including the effect thereof on the user entity's internal control. Information on nature of services provided by a user organization may be available from sources such as user manuals, contracts between the user entity and the service organization, reports by service auditors, etc. The nature and materiality of the transactions processed are accounts or financial reporting process affected by the service organization. In certain situations, the transactions processed and the accounts affected by the service organization may not appear to be material to the user entity's financial statements, but the nature of the transactions processed may be significant, and the user auditor may determine that an understanding of those controls is necessary in the circumstances. The degree of interaction between the activities of service organization and those of user entity. The degree of interaction refers to the extent to which a user entity is able to and elects to implement effective controls over the processing performed by the service organization. For example, a high degree of interaction exists between the activities of the user entity and those at the service organization when the user entity authorizes transactions and the service organization processes and does the accounting for those transactions. The nature of relationship between the user entity and the service organization include the relevant contractual terms for the activities undertaken by the service organization. Test your knowledge. Question number 9. UVW and Associates are the statutory auditor of M Limited, a listed company, for the financial year 22-23. CAU is the engagement partner for the audit assignment. He was of the understanding that, as per the requirements of one of the essays, he has a responsibility to communicate following matters to those charged with governance: the auditor's responsibility in relation to the financial statement audit, planned scope and timing of the audit, auditor independence. Which of the matters is not included in the list prepared by CAU? Discuss such matters in detail. The answer to this question is SA 260. Communication with those charged with governance deals with auditor's responsibility to communicate with those charged with governance in relation to an audit of financial statements. Among various matters, as included by CAU in his list, one of the matters that is not mentioned in the list is significant findings from the audit. With respect to such matter, the auditor shall communicate with those charged with governance the auditor's view about significant qualitative aspects of the entity's accounting practices, including accounting policies, accounting estimates, and financial statement disclosures. When applicable, the auditor shall explain to those charged with governance why the auditor considers a significant accounting practice that is acceptable under the applicable financial reporting framework not to be most appropriate to the particular circumstances of the entity. Significant difficulties, if any, encountered during the audit, unless all of those charged with governance are involved in managing the entity. Significant matters arising during the audit that were discussed are subject to correspondence with management, written representations. The auditor is requesting circumstances that affect the form and content of the auditor's report, if any, and any other significant matters arising during the audit that, in the auditor's professional judgment, are relevant to the oversight of the financial reporting process. The communication of findings from the audit may include requesting further information from those charged with governance in order to complete the audit evidence obtained. For example, the auditor may confirm that those charged with governance have the same understanding of the facts and circumstances relevant to specific transactions or events. Next, integrated case scenario. CAB is conducting audit of Havemore Limited. He is auditor of the company since the last 3 years and has found nothing unusual in operations and financial statements of the company. The company has many locations where substantial inventories are stored and lying. During his fourth year stint, he finds that inventory quantities have risen disproportionately as compared to the past few year trends. He has assessed existence of the risk of material misstatements due to fraud. The company has revenue of 750 crores during the year. He has deeply verified all aspects of pertaining to revenue recognition of the company and has concluded that there is no risk of material misstatements due to fraud relating to revenue recognition. During the course of audit, it has come to his knowledge that company is also required to install online air pollution control monitoring systems in its plant as mandated in state pollution control legislation and regulations. Non-installation of such online air pollution control monitoring systems may lead to fines and even sealing of the plant. While verifying payroll data of the company, it has come to notice that provisions of law preventing employment of child labor are not being adhered to, and the company is employing child labor in flagrant violation of rules in this regard. The company also exports part of its turnover, and the matter has gone unnoticed in the compliance audits carried out by the agencies of overseas buyers. On the basis of the above, answer the following questions. First one, considering description of the disproportionate rise in inventory quantities, which of the following is not likely to be an appropriate response to outlined assessed risk of material misstatements due to fraud? First one, observing inventory counts at all locations at same date by employing necessary resources. Second one, observing inventory counts at certain locations after prior intimation. Third one, more rigorous examination of packed items during observing inventory count process. Fourth one, observing inventory count at end of the reporting period to minimize risk of manipulation. Option B is correct, that is observing inventory counts at certain locations after prior intimation. It has been concluded by the auditor that there is no risk of material misstatements due to fraud relating to revenue recognition. Which of the following statement is most appropriate in this respect? Under that first one, the auditor needs to document reasons for arriving at conclusion that there is no risk of material misstatements due to fraud relating to revenue recognition. Next option, identified and assessed risk of material misstatements due to fraud need to be documented. Since no risk of material misstatements due to fraud pertaining to revenue recognition was identified, separate documentation in this respect is not needed. Third option, the auditor needs only to document that no risk of material misstatements due to fraud relating to revenue recognition was identified. Fourth, the auditor needs to give reference to discussion among engagement team members to document that no risk of material misstatements due to fraud relating to revenue recognition was identified. Option A is correct. The auditor needs to document reasons for arriving at conclusion that there is no risk of material misstatements due to fraud relating to revenue recognition. Third one, which of the following statements most appropriately describes responsibilities of the auditor in relation to compliance with the state pollution control legislation and regulations? Option A, sufficient appropriate evidence need to be obtained by the auditor to verify compliance. Second, physical verification of the workability of such systems is required from an auditor. Third, only inquiry of the company management personnel and review of the correspondence with regulatory authorities are suffice to verify compliance. Fourth, only physical verification of workability of such systems and review of correspondence with the regulatory authorities are suffice to verify compliance. Option C is correct. Only inquiry of the company management personnel and review of correspondence with regulatory authorities are suffice to verify compliance. Fourth question, the auditor has observed non-compliance of law prohibiting employment of a child labor. Which is the most appropriate course of action for him to proceed in this matter? Under the first one, he should obtain further information to evaluate the possible effects on financial statements. Second, he must report the matters to the concerned government department. Third, he should obtain further information to evaluate the possible effects on the financial statements. Besides, he should evaluate implications of non-compliance for audit risk assessment. Fourth, he should express a modified opinion in the auditor's report. Option C is correct. He should obtain further information to evaluate the possible effects on financial statements. Besides, he should evaluate implications of non-compliance for audit risk assessment. Fifth question, which of the following statements is most appropriate about documentation of non-compliance with the laws and regulations by an auditor in the context of SA 250? First option, instance of identified non-compliance with laws and regulations need to be documented. Second, instance of suspected non-compliance with laws and regulations need to be documented. Third, instance of non-compliance with laws and regulations finally determined by court of laws need to be documented. Fourth, instance of identified as well as suspected non-compliance with laws and regulations need to be documented. Option D is correct. Instance of identified as well as suspected non-compliance with laws and regulations need to be documented.